Something happened to your home. Maybe a pipe burst. Maybe water came through the ceiling. Maybe a tree branch took out a section of fence. You assessed the damage. You did the math. You decided the repair was beyond what you wanted to pay out of pocket. So you called your insurance company, the one you have been paying every single month for years. Because that is exactly what insurance is for. What nobody told you before you made that call is that filing a claim can cost you more than the claim pays out. Not in some rare edge case. As a predictable, documented, industry-wide outcome that insurance companies understood before you picked up the phone. Here is how it works. Every claim you file goes into a database. It is called the CLUE report, Comprehensive Loss Underwriting Exchange. Every insurance company in America uses it. Every insurer you will ever apply to will pull this report before they quote you a rate. It tracks every claim on your home for the past 7 years. And it does not matter if you switch companies. The history follows the house, and it follows you. There is no starting over. The moment your claim enters that database, your premium goes up. On a water damage claim, one of the most common claims American homeowners file, a single incident typically increases your annual premium by 25%. On a $2,580 annual premium, the national average, that is $645 more per year, every year, for 5 to 7 years. Whether you file another claim or not, whether the damage ever happens again or not. Now do the math the insurance company does not do for you before you file. A $3,000 repair sounds like a clear case for insurance, but your deductible is $1,000. That means the insurance company does not pay $3,000. They pay $2,000. You still pay the first $1,000 yourself, and filing that claim triggers a 25% premium increase for the next 5 years. $3,225 in additional premiums on top of your existing bill. You accepted a $3,225 penalty in exchange for a $2,000 check. The insurance company paid you $2,000. You paid them back $3,225. The net result of using your insurance is that you are $1,225 poorer than if you had never called. And the rate increase is still running. That is not an accident. That is arithmetic. Arithmetic the insurer ran before your call connected. And here is what makes you most vulnerable. The rate increase was calculated before you called. Your insurer knows exactly what a water damage claim costs them in future rate adjustments versus what they pay out on the claim. They run this math daily. They did not design the system to lose money on it. When you called to report damage, you were not calling a company that wanted to help you. You were calling a company that was about to make a business decision about your account. But the damage goes further. If you call your insurer to ask whether damage is covered, not to file a claim, just to ask a question, that call can be logged on your CLUE report as a $0 claim. You asked a question. They logged a claim. You filed nothing. You received nothing. But the inquiry appears in your history and future insurers can see it. Some will use it to raise your rate. You picked up the phone to get information. The act of picking up the phone became the event. And if you file 2 claims within 5 years, even small ones, even completely unrelated ones, many insurers will not renew your policy at all. They will send a non-renewal notice and exit your account. At that point, you are shopping for new coverage with a 2-claim history on your CLUE report that every prospective insurer will see. The coverage you find will cost significantly more. In some states, you may struggle to find private coverage at all and end up on a state insurance plan of last resort. Typically the most expensive and least protective option available. Think about the product you have been paying for. Every month. For years. A product designed so that using it, the way it was sold to you, triggers a financial consequence the company calculated in advance. Think about why the rate increase is never disclosed when you call to file. Think about who benefits from you not running this math before you pick up the phone. Here is the calculation that changes everything. Before you file any claim, do this math first. Take the cost of the repair, subtract your deductible. What remains is what the insurance company would actually pay you. Now multiply your current annual premium by 25% and multiply that by 5 years. If the penalty exceeds the payout, pay for the repair yourself. Keep the claim off your CLUE report. Protect the rate you have. The rule most insurance professionals apply to their own homes. Only file a claim for damage you genuinely cannot afford to pay out of pocket. Insurance is catastrophe protection. A burst pipe that floods 3 rooms is a catastrophe. A damaged fence is a maintenance expense. Your CLUE report is available to you for free once a year through LexisNexis. Pull it. Know what is on it. If you find errors, claims that are not yours, or claims that were resolved but still show as open, you have the legal right to dispute them, and LexisNexis is required to investigate. You have been paying for insurance every month because you believed it protected you. It does, for the disasters that would otherwise destroy you financially. For everything smaller than that, the protection comes from never filing the claim. The company ran that math before you called. Now you have it too.